Alright, you are welcome back to my channel. Today we are going to be looking at posting into the partnership appropriation account. And before we go into posting into the partnership appropriation account, like I always say, don't forget to like my videos, subscribe to my channel, and turn on the notification button for more live updates. Now, before we go into this, our last video we talked about joint venture, and I told us that joint venture it's a business that does not have continuity, but in partnership we have continuity of business. Now, there are certain caveats that we need to look at whenever we are posting. Generally, in accounting, in any class of account you are asked to post, there are certain caveats, there are certain things that are hidden, certain figures that are hidden in between the questions that you need to be very careful about when posting, because missing such information can alter the cost of your calculation, and at the end of the day you come out with a wrong figure. Now, if you look at these questions, they said Evans and Boside are in partnership, sharing profits and loss in the ratio 4:2. So when we are sharing their profits, bring that to mind that the profit should be shared in the ratio 4:2 respectively. And it was also agreed that interest on capital is charged at 5% per annum. Then also, here we normally use net profit. If you are not given net profit and you are asked to calculate the trading profit and loss of the partnership business, you have to calculate that to find your net profit. Is the net profit that is being rolled over into the partnership appropriation account. And our net profit, which is the income we have in the business, is on our credit side, and expenses incurred are always on the debit side, such as interest on capital, salaries, share of profit are all under the commission, also are all under the debit side. Now, also on the credit side, we have interest on drawings. Drawings are amount of goods that are taken out of the business for personal use. So if partners withdrew certain goods or certain amount of money from the business for personal use, it's called drawings. So interest that are charged on drawings are income to the organization. So it goes into the credit side. So let's go straight into our posting. Now, we said Evans and Boside and partnership sharing profit and loss in the ratio 4:2 in respectively. It was agreed that the capital account would be fixed and attract an interest of 5%. So we start with interest on capital. So we'll calculate the interest on capital from both partners. We have Evans. Evans is 5%. 5% is 5/100. Multiplied by Evans' capital investment, which is 100,000. So we have 5% of 100,000. Now this will give me 0,000. This is 1. 100 go into itself. 5 times 1,000. This will give me 5,000. Then we have Boside. Boside is 5% of 80,000. Now, 5% of 80,000 is 4,000. So if we add the 5,000 and 4,000 from the capital interest on capital, we have 9,000. So the next expenses we say is salaries. Salaries that are paid to the partners. So we have salaries. In my salaries, I'll calculate it individually. We have Evans and then we have Boside. Now from here, we're told that salaries for Evans is 4,000 and salaries for Boside is 8,000. If we add the two of them together, this will give me a total of 12,000. Then the next one, if there is interest on commission, there is no commission on this, so we leave the commission. Then we go to share of capital, share of profits. Now, share of profit, we have Evans and I have Boside. So first we go to our net profits that was brought down. So I have net profits brought down in our credit side. Our net profit is 50,000. Then we have interest on drawings that is charged. Like I said, interest on drawings goes to the credit side. So we have interest on drawings. Now Evans was charged 750 and Boside was charged 250. Now if you add these two together, that will give me a total of 1,000. Now 1,000 plus 50,000, that will give me 51,000. Now I'll add this together. 12,000 plus 9,000, that is 21,000. So 51,000 minus 21,000, that will give me 30,000. So this is a profit that was made by the partners. And in this question here, it said the share of profits is on the ratio 4:2. So what do? I add my 4:2, we add it together, which will give me 6. So Evans will take 4/6 multiplied by the profit in order for me to determine his own share or his take home of the profit. So I have 4/6 multiplied by 30,000 over 1. Now 6 will go into 35, 0, 0, 0, 0, 0, which is 5,000. So 5,000 multiplied by 4 is 20,000. Then we have Boside is 2 over the total ratio, which is 6, multiplied by 30,000, divided by 1. 6 into 30,000 is 5,000. 5,000 multiplied by 2 is 10,000. We add, if at the end of the day, if the share of profit, if we sum it and it did not give us back the profit that was generated by the business, 30,000, it means our calculation is wrong. 20,000 plus 10,000 gives us 30,000. So by the time we add 30,000 plus 12,000, 42,000 plus 9,000 is 51,000. So we balance the credit side also. So I just balance and bring it down. 51,000. That is all on the appropriation account. Now the only thing missing here is commission. Now if discount or percentage was given on commission, we are going to calculate it just the way we did this. But in a situation where commission is not given, we skip that transaction. Sometimes salaries might not be given or interest on capitals might not be given. When they are not given, you also skip. Then when we come to capital account, all we just need to do, I'll say 31st at the end of the accounting year, 93, because we have the date, 31st December, that was when the transaction was entered, that's the end of the business transaction, 1993. Their capital, Evans had a capital of, Evans has 100,000 and Boside invested 80,000. So we have 100,000 and we have 80,000. So I have Evans and I have Boside. E for Evans, then I will just close. That is the capital invested. Then on the 1st of 1st, 93, the capital invested by Evans is 100,000 and Boside is 80,000. B. Evans. Now, you also close. Balance carried over to the next accounting year, which will have the balance carried forward. It will still be 100,000 and 80,000. That is all in my capital account. Then, if we come to our current account, this is where it gets a little bit tricky. So, allow me to create space. Let me create space. 51,000. So under our current account, we have balance brought forward. Our balance brought forward under our current account, I have Evans, I have Boside. Now under my balance in my current account, Evans have 20,000 and Boside have 30,000 in his current account. Now, every income that was generated that is assigned to Evans or Boside goes there, and their expenses comes down to this part. Now, under their expenses, we have interest on drawings, and then we have drawings. Now, let me say I have interest on drawings. Evans and Boside. Our interest on drawings, Evans' interest on drawings is 750. Boside's interest on drawing is 250. Then we have drawings itself. Now the amount that was drawn by either of them, Evans is 15,000, so we have 15,000 under Evans, and Boside we have 5,000. So if I sum these two together, this plus this will give me 15,750 for Evans, and 5,000 plus 250 will give me 5,250 for Boside. Then under this place now, we also have salaries. They received salaries at the end of the business. Evans' salary is 4,000 and Boside's salary is 8,000. So Evans is 4,000, Boside's salary is 8,000. Then we have share of profits. Our share of profits. Evans' share of profit is 20,000. And then Boside's share of profit is 10,000, so I have 10,000. Then the next one that I have here is interest that I got on the capital that was invested, which is this interest on capital. So interest on capital. Interest on capital, Evans got an interest of 5,000, and then Evans got interest of 4,000. So what do? We just close. When we close, we sum them together. So 20,000, 24,000, 44,000, 49,000. We have 38,000, 48,000, 52,000 for Boside. Now remember in cash book, when we are balancing accounts, we balance both Evans against Evans and then Boside against Boside. So here we have balance carried down or carried forward. 49,000 subtract this, 52,000 subtract 5,250. So I have 49,000 minus 15,750. That will give me my balance of 33,250. If I sum this together, it will give me a total of 49,000. So also 52,000 minus 5,250. 52,000 minus 5,250. That will give me a balance of 46,750. Now, by the time we sum this together, it will also bring me to the same sum balance of 52,000. So this brings us to the end of our class or the end of our lesson. Now, mind you, this is our current account for Evans and Boside. This is for all their earnings within this transaction, this accounting year, and this was the expenses that was incurred within the accounting year. That is our capital account, and this is our appropriation account. Now, if you have any question, just don't forget to drop it on the comment section. And like we always say, don't forget to like our videos, subscribe to our channel, and turn on the notification button for more live updates. Thank you.